All right, everyone, buckle up. The news cycle is moving at lightning speed, and if you're not paying attention, you're going to miss out on some massive shifts. Today on Microsoft Sphere, we're diving headfirst into the stories that are shaping the landscape, sparking debate, and setting the agenda. Get ready for some unmissable updates that could impact everything. We've got the inside scoop on major market movements, significant leadership changes that signal new directions, and critical investment decisions that have everyone talking. You don't want to miss a second of this. Let's get right into it. First up, we're breaking down a dramatic plunge in a tech giant's stock. What's causing the sudden nosedive, and what does it mean for the market? Then, we're tracking a key executive move that could redefine an entire industry's approach to innovation and network development. After that, we're dissecting the big question on every investor's mind. Is it time to buy or fear this major tech stock after a recent pullback? And finally, we're looking at how strategic investment research is highlighting specific companies, including some unexpected players, to beat the market. Stay locked in, because this is your essential briefing. Make sure you're subscribed and hit that notification bell so you never miss an update. Market shockwaves hit tech giant. In a move that sent ripples across the financial world, Oracle, ORCLN, experienced a significant intraday plunge, shedding 5.9% of its value. This dramatic downturn has left investors and market watchers scrambling for answers, seeking to understand the underlying causes of such a sharp and sudden decline in a company of Oracle's stature. The drop occurred during regular trading hours, highlighting a significant shift in investor sentiment or a reaction to new information that fundamentally altered the perception of the tech behemoth's immediate future. Such steep, rapid declines often signal underlying issues that extend beyond typical market fluctuations, prompting a deeper investigation into the company's performance, strategic direction, or external market pressures. This significant price movement is particularly noteworthy given Oracle's position in the market, especially its involvement in the burgeoning field of artificial intelligence and cloud computing, areas that have seen substantial investor interest and capital allocation. Any negative development for a company like Oracle can have a cascading effect, influencing broader market trends and the performance of related technology stocks. Analysts are dissecting every available data point, from recent earnings, reports, and forward-looking guidance to competitive landscape shifts and macroeconomic factors that might be impacting the technology sector. The market's reaction suggests that either current valuations are being questioned, or there are specific concerns about Oracle's ability to maintain its growth trajectory and competitive edge in these critical growth areas. The question on everyone's mind is what specific catalysts triggered this sharp sell-off, and what the long-term implications might be for the company and its investors. Audience impact. The sudden drop has fueled intense discussion online, with many investors questioning the stability of tech stocks and seeking clarity on Oracle's future performance. But what exactly is driving this volatility? We'll explore the executive shift that's making waves in the digital infrastructure space. Digital infrastructure gets a new leader. GlobalConnect has announced a significant appointment, bringing in a seasoned executive from Juniper Networks to lead its technology and engineering efforts as the new Chief Technology and Innovation Officer, CTIO. This strategic move is designed to consolidate the company's IT technology and engineering departments under a single, unified leadership. The primary objective behind this integration is to accelerate the development of a cohesive and unified network infrastructure, foster the creation of more standardized products, and ultimately drive greater automation across service delivery and operational processes. This consolidation signals a clear intent from GlobalConnect to streamline its technological operations and enhance its capacity for innovation in a rapidly evolving digital landscape. The newly appointed CTIO, Alexander Hoffman, brings a wealth of experience from his previous role at Juniper Networks, where he was instrumental in heading the company's AI-based enterprise wide area network (WAN) portfolio across the EMEA region. His background also includes senior positions at industry giants like Oracle and Acme Packet, providing him with a broad and deep understanding of the technology sector, from enterprise solutions to network architecture. Hoffman expressed his enthusiasm for the new role, stating, "I am truly excited to join GlobalConnect at such a pivotal time." The company has established itself as a key player in Northern Europe's digital infrastructure, and I look forward to working with the team to build the next-generation networks and IT platforms that will support both our customers and society's growing digital needs. This sentiment is echoed by GlobalConnect's EVP of NetCo, who highlighted the increasing importance of software and IT-driven networks for future growth, particularly in the business-to-business market. The EVP emphasized that gathering group IT, technology, and engineering under one leader is crucial for building the software platforms that will underpin their future product development. Hoffman's extensive background in software development, enterprise architecture, and next-generation networks makes him, in their view, the ideal candidate to spearhead this critical transformation. Audience impact. Industry analysts are watching closely, expecting this move to streamline operations and potentially lead to more integrated and advanced digital solutions. Will this leadership change signal a new era for the company? We're now turning to the critical question facing investors: buy or fear the current market sentiment surrounding Oracle stock. Oracle stock, a buy or a sell signal. Last week saw a notable 5% dip in Oracle stock, NYSE, ORCL, a movement that mirrored a broader market sentiment characterized by caution, particularly among tech-related stocks with significant ties to artificial intelligence. This pullback has been attributed to growing concerns about a potential market bubble in the AI space, exacerbated by the substantial capital expenditures companies are undertaking in this sector. Despite this recent softness, which has seen Oracle shares decline by approximately 10% over the past month, the company has demonstrated robust performance over the longer term, with its shares appreciating by over 60% in the preceding 12 months. This performance has been largely bolstered by increasing demand for its cloud services, a key driver of its growth. The central debate among investors now revolves around whether this recent dip presents a buying opportunity or a signal to exercise caution. Analysis suggests that while Oracle's core business remains strong, its current valuation may be considered steep. This assessment is based on a comparison of Oracle's present valuation metrics against its recent operational performance and historical financial data. Evaluating Oracle across key parameters such as growth, profitability, financial stability, and resilience during market downturns reveals a company with a solid operational and financial foundation. However, the market's perception of its valuation, particularly its price-to-sales multiple, appears elevated when compared to the broader market and even its own historical averages. Currently trading at 11 times trailing revenue, which is significantly higher than its 3-year average of 6 times revenue, the stock appears to have already priced in a considerable amount of optimism regarding its future growth prospects, including projected revenue increases through 2029 and its historical ability to withstand market downturns. Audience impact. Investors are actively debating Oracle's valuation, with opinions divided on whether the recent dip is a buying opportunity or a sign of over-evaluation. Is the market's optimism fully justified? We're shifting gears to explore how expert analysis is pinpointing specific stocks poised for market-beating returns. Zacks highlights top stocks for market outperformance. In a market environment marked by fluctuating performance, with major indexes like the Dow Jones Industrial Average, Nasdaq Composite, and S&P 500 experiencing minor losses last Friday but achieving monthly gains, strategic investment insights are paramount. Despite earlier highs driven by strong Q2 GDP data, investor sentiment was tempered by profit-taking and persistent inflation concerns, further complicated by geopolitical tensions and energy market uncertainties. Amidst this backdrop, Zacks research continues to offer guidance on navigating market complexities, emphasizing its time-tested methodologies for identifying potential market leaders. Zacks has highlighted its track record in guiding investors, showcasing specific stock performance following their recommendations. For instance, Dorian LPG Limited, LPG saw a 26.4% gain versus the S&P 500's 6.2% increase after a Zacks Rank 1 strong buy upgrade. Similarly, FS Bancorp, Inc. FSBW returned 8.2% compared to the S&P 500's 5.4% rise following a Zacks Rank 2 buy upgrade. The Zacks model portfolio, comprised of Zacks Rank 1 stocks, has demonstrated consistent outperformance, albeit with varying degrees relative to the S&P 500 across different years. For example, it returned plus 147% in 2025 through August 4th, against the S&P 500's plus 560%, while in 2024 it returned plus 224% versus the S&P 500's plus 28%. Over the long term, since 1988, the Zacks 1 rank stocks have generated an annualized average return of plus 23.6%, significantly outperforming the S&P 500's plus 11.3%. The research firm also points to its Zacks recommendation system, which classifies stocks into outperform, neutral, and underperform categories based on earnings estimate revisions and analyst judgment, noting strong performances from companies like Farming Group NV, PHAR, and Lumentum Holdings Inc. Light following upgrades. Additionally, stocks within the Zacks focus list and model portfolios, such as Intellia Therapeutics, Inc., NTLA, and Oracle Corporation, ORCL, have shown considerable gains, with Oracle's ECAP portfolio outperforming the S&P 500 in Q1 2025. Audience impact. Investors are keenly interested in Zacks stock picks, seeking to leverage their research for potentially higher returns in volatile market conditions. These insights offer a glimpse into strategies for navigating market uncertainty. And that's our rapid-fire update for today. That was a whirlwind tour of today's biggest stories. We saw Oracle's stock take a sharp dive, explored a major leadership change set to reshape digital infrastructure, debated the investment potential of Oracle stock amidst market shifts, and highlighted expert picks for beating the market. Don't miss out on future insights. Make sure you're subscribed to Microsoft Sphere, hit that notification bell, drop a like if you found this valuable, and let us know your thoughts in the comments below. You can also follow us on all social platforms for more updates. We'll see you next time.